So the time alignments, Perry says, the time alignments are of gold to liquidity to Bitcoin are another quote unquote proof of Bitcoin being quote digital gold. Yes, Perry, I agree. The fact that there's a correlation at all between these and these shift constantly. And I'm going to show you that if you want. I'm going to show the correlation between Bitcoin and gold because it is that one is just fascinating. Now you have to do a weekly chart because gold has it doesn't trade on the weekends or on holidays, so you can't do like a one-to-one comparison. So on a daily basis, so I do weekly, and the correlation is just incredible. Like 6 months forward for gold translates to highs and lows in Bitcoin at big highs and lows. So the 320-day cycle, not the smaller moves. Like you see with liquidity, the reason I'm just fascinated with liquidity, right? And I just want to be clear. I don't know that this will last forever. I hope it does. It's like having a crystal ball. I just don't think it will. That being said, liquidity, gold, Bitcoin follows liquidity very closely, especially central bank liquidity. We get all the 80-day highs and lows, the 320-day cycle highs and lows, and we even get these smaller moves. Like we're getting everything just by looking at central bank liquidity. If you look at gold, it's only the big moves that show up in the in Bitcoin. So they line up at important highs and lows, the 4-year cycle highs and lows for sure, always. 320-day, most of them. So you see a lot of correlation between them. So yeah, to answer your question, if that was a question, oh yeah, there's a question mark. So yeah, I do think that the market treats Bitcoin as a safe haven, which is why it trades with this interesting correlation with gold. However, gold is a forward-looking indicator to Bitcoin, which is awesome because trading gold is great, but it's not as rewarding as trading Bitcoin. But if you can use gold to trade Bitcoin, I mean that's just gold. Pardon the pun. Anyway, so so Perry's saying maybe some big banksters. Did I read that right? Oh yeah. Maybe some big banksters in the early liquidity printing pipeline are literally buying large amounts of BTC on exchange as they get their hands on new liquidity, controlling price. So one, remember, Barry, so Bitcoin moves 84 days after liquidity moves. 84 days, that's 3 months, almost 3 months. That is strange. But look at the correlation. It's undeniable. The correlation is undeniable. Now you have to do some curve fitting here, but not in a bad way. Just just so you can see that both charts are doing the same. You just kind of have to bring them in line like this. You bring them in line. There you go. And then you see how it's just one moves with the other. So you might say, well, they're moving together until you remember that one of them is forecasting the future 84 days for you. And then it becomes a fascinating indicator. And I just want to show you one thing here because it doesn't always work. Of course, nothing is perfect. This is one time when it didn't work. And notice this divergence here. So they're following each other and then they break. Bitcoin up, liquidity down. And then we have this low in August, which in liquidity, again, it was a bit off. It was July 23. This is partly why I said, no, this is the reason I said that if you have a low, say on July 23, you have to look at the forecasts to see if you have a low that's close to it. And in this case, what we had is August 6, this low here, right? So you can use liquidity to say, okay, we're coming into an important low. Let me look at the forecasting model to see where that low is going to be exactly, because it doesn't always, it can be off by weeks in liquidity. So in liquidity, we can be off by weeks. With the forecasting model, we can be off by up to 4 days. So not weeks, just a few days. So it fine tunes the forecast. In other words, if I'm looking at this chart, I don't know what's happening here in July. I'm expecting Bitcoin to fall between the high on the 31st of May, which funny enough, in this case, this is funny because the forecasting model, I don't have the forecast here because I scrapped them once the year goes by, but I think we also had a high exactly on May 29, like which is between, this reason I say that's interesting is because it was between these two highs, a double top. So between that double top, there was a forecast for a top, and sure enough, liquidity tops out exactly then too on the 31st of May. So between the 31st of May and let's call it early July, early August, late July, nothing but downside. That's what liquidity is showing us. But Bitcoin rallied. It rallied starting on, so it took a break here, but then it started to rally on the 13th, I believe it was. This is the failed Trump assassination attempt. That gets Bitcoin to decouple from liquidity, but only briefly, only for a little bit, because they both fall into this late July, early August low. So Bitcoin decoupled from liquidity for just a couple of weeks, showing you that the reason I love this is because if you look at M2, that kind of obfuscate the actual relationship between liquidity and Bitcoin. But if you look at central bank liquidity, you can see that at times there might be catalysts or things that make Bitcoin break with liquidity. We saw it here with Trump. That's not the big one, though. The big one was the ETF. So ETF is here, and this is like, actually, I wrote a post on this on my Substack that I think you can, it's free, so you can see it for yourself. I don't know how to line these two charts up. It's hard to do. But notice that liquidity was basically after pointing to a low here, an important low sometime here in September, late September, liquidity is just making, let's see if we can do this, because I mean, we have to cross them. But so we have this rally here. I'm not doing a good job with this. Let me see. There we go, like that. Okay, there we go. I think that showcases what I mean. And honestly, this is the first time Bitcoin breaks with liquidity because they were just lined up prior to this. Come on, load. There we go. So you see how they're lined up? All this is 2023. This is Jan 1st, 2023, right there. You see how they're lined up? They're totally lined up. So they're both doing the exact same thing. You can say that all of 2023 is just liquidity, just following liquidity, goes up, goes down, follows liquidity, follows liquidity. Oh, that's not a good one. There we go. It keeps following liquidity. And then we get to, I suppose it was here actually, September 12th. There we go. And then we go into early September, and then Bitcoin begins to climb. And liquidity keeps falling. Now, you know what happened here. What happened here is ETF rumors begin circulating. I think what started it, I had the AI look into this. I think what started it back then is that the SEC lost a lawsuit against Grayscale, the issuer of the GBTC closed-end fund, which they wanted to convert into an ETF. The SEC said no. The Grayscale sued the SEC. They lost the lawsuit. I think, I could be wrong about this, but I think they lost this lawsuit in September, which started speculation. Oh, maybe the SEC is going to move to approve the ETFs. And then in October, the SEC says that they're not going to appeal the decision. So they're not going to contest the courts. They're just going to, I believe that what the court order is a reconsideration of the filing to become a true ETF. And around the same time, I remember that BlackRock was filing an application, or that was earlier. I think that may have been in June or in July of 23. So suffice to say, all this ETF speculation came to a head, especially in October of 23, and they just decoupled. So Bitcoin began to surge. This is to this date, since the bear market low, November 22. This is the best rally Bitcoin has done, or in crypto has embarked on. Is this ETF fueled rally? It's clearly an ETF fueled rally. It clearly is not liquidity, because liquidity is falling in that time period. But guess what? It gets even better than that, because when you fast forward to what happened in January, look what happens in January. This is amazing. Like, this almost seems like a joke. But you get to January, ETF approval. So the ETF was approved formally on January 10. You get to January 10, what's happening now is Bitcoin liquidity, it just fell back in line again. So as soon as ETF got approved and started trading, liquidity and Bitcoin fell right back in line, resuming their normal correlation. I mean, that's incredible. I mean, that's crazy that this would happen. So just fascinating. So like I said, they don't always move together, but generally they do.